I'm Caroline Hyde in New York, in for Emily Chang, and this is Bloomberg Technology. Coming up in the next hour, the WeWork discount. The office rental company WeWork considers slashing its valuation before its IPO by as much as half, to between $20 and $30 billion. More on why and what's at stake for SoftBank, which owns a hefty share in the company. Plus, speaking of IPOs, Peter Thiel's data mining company Palantir is on the hunt for overseas funding, potentially pushing back any initial share sale until at least 2022. We've got details on the Bloomberg Scoop. And forget Facebook likes, how about Facebook loves? More on the social network's plans for a dating service. But first, to our top story. WeWork is significantly reducing the valuation it's seeking in its US IPO. Originally pegged to a $47 billion valuation in its last funding round, well, sources are now saying WeWork could now target closer to just $20 billion. And while WeWork co-founder Adam Neumann, well, he's got a lot riding on the success of going public, one company could be hit even harder: SoftBank and its affiliates, who own about 29% of WeWork, which means its fortunes are very much tied up in a big way. To discuss in San Francisco, I'm pleased to say we're joined by Abby Adleman, BoardSpan CEO. BoardSpan is a software company using deep domain expertise to help create high-performing boards. Here in New York, we have Bloomberg's Gillian Tan, who has been covering the story for us. And over the phone, Kathleen Smith, principal and founder of Renaissance Capital, provider of institutional research and IPO ETFs under the ticker IPO. So let's put this all in context, first of all, with Gillian, because you've been keeping abreast of the numbers. Why the lower valuation? I mean, to put it in perspective, $47 billion is what their last funding round was at, and now we could be as low as 20?
Yeah, so these down round IPOs are becoming increasingly common. I think investors saw how Uber and Lyft performed earlier this year, large venture-backed companies, and are sort of projecting a little bit on WeWork and its growth, and sort of looking at the revenue assumptions and growth assumptions and sort of paring down their expectations.
To get the perspective on the IPOs and how much this is being factored in, like the Ubers, like the Lyfts that didn't go quite as well as expected, Kathleen, your perspective on this particular share sale, was it always the case that $47 billion was way out of the league, or is it market sentiment and concerns there? Is it more to do with the prospectus, for example?
Well, I think most of investors and analysts who are looking at, from the buy side, who are looking at companies, we knew that $47 billion was just a kind of a ridiculous number. It didn't make any sense. Even, I think, when that round was done by SoftBank, it didn't make any sense. And we're seeing at least the company react to that with this rumored new range. The range at $20 billion at the low end may even be above what, if you look at peers, including IWG Group, if it were valued close to that company, it would be even below $20 billion. We look at companies as really the poster child for the disconnect between private company valuations and what the public markets are willing to pay for these companies. And with Uber and Lyft having shown us that mistakes can be very painful for investors when there's overvaluation, that is going to spill over into WeWork, and there's going to be a lot of pushback to make sure that public investors do not lose money in the WeWork IPO.
And Abby, from your perspective, people have been worrying about this particular IPO, not only because of perhaps the valuation and the numbers put it on it, but also the corporate governance. How intertwined the chief executive is, the co-founder Adam Neumann, his stake in the business, and why he's been selling some $700 million worth of his own holding.
Yeah, Caroline, it's a great question. And from my point of view, they're actually closely related topics. If you think about the disclosures that came out over the last few weeks since the IPO was filed, and quite the news that it created around everything from the lack of diversity on the board to the pretty excessive amounts of control that Adam Neumann's keeping, is it really a surprise that we're getting a lot of investor pushback? I sort of liken this change in the IPO strategy to investors speaking their mind ahead of the offering actually coming. And that's not a surprise in this environment where we're getting a lot of activist investors.
Abby, was there anything particularly in the prospectus that caught your attention that is out of whack with recent IPOs or recent levels of control by founders? Because that perhaps isn't that surprising, nor sadly is lack of diversity on boards.
Yeah, that's right. The diversity issue, I think, took everybody's surprise, particularly for a company like WeWork that most people would consider pretty progressive and cutting edge, and to have no women and frankly very little diversity at all on this board. Now, they've remedied it purportedly with having a woman post-IPO, but it feels a little too little too late. The other things that I think jumped out to me in the governance world are the CEO succession plan, or lack thereof, really. It's very clear, and it's stated in black and white, that Adam Neumann and family will control the CEO process the whole way through. And frankly, that is absolutely a critical responsibility of the board. And when the board's been stripped of that, it really sends a lot of flags up for investors.
Gillian, you're nodding vigorously there. There have been a lot of red flags surrounding this IPO, but what do you think investors are basing their valuations off? Are they considering this a tech company? Are they considering it a real estate business at the moment? And how does that square as we go towards an initial listing?
So I think the thing the company is trying to convince them of is the revenue growth. So more like a tech company because of the revenue growth versus a real estate company. And the metric that I think we did report today is, I think, 28% revenue growth going to 2024. So that's pretty far out growth. Adam Neumann sort of told the analysts who he met yesterday, he gave them certainty. He said they're comfortable that they will be able to achieve that. And so if he's able to, maintain that narrative, if analysts buy it, if buy his story, slap, buy recommendations on the stock that they're all going to be covering, it'll be interesting to see if investors come out with a different answer.
Kathleen, your perspective, having tracked recent initial share sales, particularly of loss-making businesses, David Kostin of Goldman Sachs today was putting out thought leadership piece saying, look, you should actually really only care about the revenue growth, or at least prioritize that over profitability of these businesses at the moment. Is this something investors are getting their heads around? And are they willing, sometimes, for example, in the case of Amazon, to take the promise of jam tomorrow if they can see that the revenue is going to drive profitability at some point?
I think it's the rare company that can get away with that. And we've studied companies and the size of their losses leading up to their IPOs. And WeWork has it's the second most money-losing IPO in history after Uber. The third one is Lyft. The list goes down. And, these companies do not perform well. This history is not a good one for investors because it's very difficult to understand how to value the companies, and it takes just so long to figure out the business model. I will say there's a few troubling trends in looking at the prospectus. We are seeing some things like their contribution margin is weak. It's declined from what it's been historically, and the average revenue per unit is fairly flat. We'd like to see certain metrics that show us, this business can really scale to a point where we can get confident in the profitability. So really it gets down to, if we can't see that and we're having a hard time with the unit economics here, then we're going to have to see a very low valuation, or I think it's going to be challenging. I will say in the IPO market, next week we're going to see Cloudflare. This IPO has a range that's the same as its last valuation round. So the public market is getting to be pretty price sensitive about these very high valuations that are given in the private market and whether they translate at all and well into the public market.
Amazing, considering that we've got the S&P about 1.5% off its record highs. You would have thought it'd be a good time to be coming, but clearly questions are abound. Abby Adlerman, we thank you, of Boardspan, Kathleen Smith of Renaissance Capital, and our very own Gillian Tan. Great perspective from all of you. Now let's talk about a different IPO and maybe the pushing back of it. Peter Thiel's data mining company Palantir is in talks to raise funding from private investors, including those outside of the United States. The discussions could delay its IPO until 2022 or 2023, according to sources. With more on this Bloomberg scoop, let's bring in Lizette Chapman from San Francisco. So maybe, considering all the concerns about the latest initial share sales, it's a good time to keep on tapping the private markets.
That seems to be what's happening right now at Palantir. Our sources tell us that they have been talking to a range of overseas investors, including Temasek and also SoftBank, to raise a significant round that would help ease the IPO pressure and help delay it for 2 to 3 years.
Do we know, I mean, you mentioned SoftBank, but do we know what's prompted this in any other way? Is that also, as a very secretive business, how really does the whole business model square with becoming a publicly listed business?
That's a good question. It has two sides of its operation. It's got the government work that a lot of people may be familiar with. It's credited with helping to capture Osama bin Laden, and the more recent, more controversial help that its technology has played in aiding the immigration, separate families at the border. They also have another side of their business which provides the same data mining and analytics to companies including Merck for drug discovery and also Airbus. The big challenge Palantir has had is that it's always been building for the long term. This is an ancient company by Silicon Valley standards. It's 15 years old. That's more than 2 times the length that it normally takes for a company to go public. But this company has had a very tight-knit group of investors that have been extraordinarily patient and waiting for the big payoff. The challenge has been that it has not yet turned an annual profit.
We've heard that one before, and we'll see how much longer those very patient investors have to wait. It was a great scoop. Lizette Chapman from San Francisco, we thank you for it. Now, let's just turn to another key story I want to flag you in the markets today, because the Trump administration has unveiled a sweeping plan to revamp the housing market. Now, the proposal from the Treasury Department would release Fannie Mae and Freddie Mac from government control. Fannie and Freddie back half of all mortgages, and 11 years ago this week, they were put into government conservatorship during the global financial crisis when the housing market unraveled. Now coming up, Sonos ditches the voice commands, why the company's decided to go microphone free with its new speaker despite looming competition from Apple and Amazon. That's next. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg app, Bloomberg.com, and in the US on Sirius XM. This is Bloomberg. Smart speaker maker Sonos unveiled 3 new products Wednesday, including its first portable speaker and one that's completely microphone free. This is, of course, competitors Apple, Google, Amazon come under, well, quite a bit of fire for reviewing listening to users' voice recordings. Bloomberg's Emily Chang spoke exclusively with the Sonos CEO Patrick Spence about the new products.
Today marks a new era for Sonos. So today, Sonos goes beyond the home. You know, we've been known for years as the leading home audio solution, and today we take everything great about Sonos and take that to the backyard and to the beach with our new product, Move. So we're extremely excited to usher in this new era.
Why choose an outdoor speaker as the first out-of-the-home product?
You know, it was a request from our customers that the 2 things customers have been asking us for is an outdoor speaker and a portable speaker. And so Move is the perfect solution to what customers have been looking for. It builds on a lot of our expertise around the home, and yet it allows us to as well expand into these new spaces and learn a little bit about Bluetooth, learn more about battery life as well. And so it really builds on everything we've learned over the last 17 years.
Why not headphones?
You know, I think there's opportunity long-term in all areas of audio outside the home, and that's really what Move signifies, is that opportunity to start going beyond the home. We think we're also announcing today 2 new products for the home, right, that help really extend our leadership in the home. The One SL, which is like our Sonos One product without microphones for those that are more privacy focused, and the next generation of our Connect called Port. And so those are actually, you know, strengthening and building on our momentum in the home. And then we think there's tons of opportunity outside the home, and the right first step is with Move as we move to a portable outdoor speaker.
The Sonos One SL, without a microphone, as you say, without a voice assistant, which certainly goes against the trend. Do you think consumers don't want somebody listening to them in their living room, or don't want that capability necessarily?
Well, what we want to do is provide freedom of choice. So we have a set of products, and we think that it's important to give customers that choice. We've certainly heard from some customers that are uncomfortable with microphones in their home, and so we want to make sure that we have options for those that do want to use voice assistants in our One product and our Beam product, now Move, and as well we want to make sure we have an option for those that aren't comfortable with microphones, and that's really what we're delivering with the One SL.
You've partnered with Amazon and Google to integrate their voice assistants. What about Apple? Any progress on integrating Siri?
we're very open to all the voice assistants that are out there today. So we would welcome that. We haven't, seen Apple putting Siri in other products at this point, but we certainly remain open to incorporating Siri when Apple's ready.
When cooperating with these big tech partners, do you have any concerns about them stealing your business?
We have competed and partnered with the big tech companies for about a decade now, both around the streaming services and more recently around the voice assistants. Obviously, we've seen a lot of big tech companies jump into the space with competitive products, and we've grown right through the new entrants entering our category. We invented the space, and certainly it's something we have to navigate as we go through it. But I think if you look at both the period of 16 years of us as a private company and now just over a year as a public company, we've been able to navigate what are some tricky waters at times, and I think that's kind of the special sauce of Sonos, is being able to build a solution which is something that sounds great, provides an easy experience, but also provides customers freedom of choice. So that's something that I don't think the big tech companies offer. I think we are known for providing customers that freedom to choose whatever streaming service, whatever voice service they want, and I think that's really set us apart.
And this is something that folks have talked about for years, but with Apple struggling in the home speaker space, certainly the HomePod is not what Apple might have wanted it to be. They like to be the best, but they're not dominating the market. Would you ever sell to a company like Apple?
Well, I try to stay focused on making sure that we are launching the best products possible for our customers. That's what I'm focused on, and that's what we're really doing with Move, 1SL, and Port, is making sure that we continue to build our business. We've had a year public now where we've done exactly what we said we would from a top line and bottom line perspective, so we're feeling good as a independent public company that offers a lot of freedom of choice across services.
Apple, Amazon, Google are all under fire for having humans listening to the conversations that customers are having with their voice assistants. How badly do you think these companies overstepped this time?
I think at the end of the day that every tech company has a responsibility to treat its customers' information the right way. And I think this has been an important lesson for some companies in really making sure that they are treating the information with the respect that it deserves. And whether you're acquiring it through voice or acquiring it through an email form or acquiring it in some other way, I think the duty as a tech company, as any company, is really to make sure that you're using that data the right way and you're being transparent with customers about how you're using that data and who else might be accessing it. And that's certainly what we've tried to do in our privacy statements. We've tried to use plain English language as we've gone through that. And I think the industry can do a better job of that, and we're certainly trying to lead the way.
Sonos CEO there, Patrick Spence, speaking with Bloomberg's Emily Chang. Now coming up, fingerprint features on smartphones. Well, the technology exists, but now Apple could be playing catch-up with other smartphone makers in a big way. We discuss next. And Bloomberg Technology is live streaming on Twitter. Check us out, it's @Technology. And be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg. Now, the company behind Nokia branded phones says it's sold more than 10 million retro revival handsets, like this revamp of the Nokia 3310. Now it's redone the flip phone too. HMD Global unveiled the Nokia 2720 today in Berlin. Flipping open the device, remember, it answers any calls, if you can cast your mind back that far. It costs less than $100. And Nokia's secret weapon apparently is still the video game Snake. Been driving sales for Nokia phones since all the way back in the year 2000. Meanwhile, Apple is developing in-screen fingerprint technology for its iPhones. Bloomberg's learned that the feature could be available in next year's phones. Apple's had fingerprint scanning since 2013, but it's integrated into the iPhone's home button. Now, the new technology would allow users to scan fingerprints on a large portion of the display. This would also work with current Face ID system. To discuss, we're joined by Bloomberg Technology's Mark Gurman, who gets scoop after scoop on these sorts of things. So why is it good to have it on the screen, Mark?
Yeah, that's a good question. Well, first of all, it's good to have both types of biometric technologies, right? There are lots of pros to Face ID, but there's also cons. There's lots of pros to Touch ID, but also cons. Some of the features are more useful during certain times of the day, such as if you just wake up, you get out of bed, it's harder to enable Face ID, have that work. With Touch ID, it's easier. So if you have the best of both worlds, you'll have a better chance of getting the phone unlocked securely than you would by having just one of them.
Are you trying to insinuate that we're unrecognizable first thing in the market? Morning, Mark. I can't believe it.
I think that is what I'm trying to say, yes.
What about the fact that they're actually a bit behind the curve in this one, right?
They are a little bit behind the curve here, given that some Android phones from Huawei, Oppo, etc., Samsung, of course, have been doing this the last several months. But the one thing that shouldn't be lost on this is that Apple was actually first to take fingerprint scanning at all in phones mainstream with the 2013 launch of the iPhone 5S. Now, I remember Touch ID coming out with the 5S, maybe 5-6 years ago now. It was extremely impressive. And so when Apple was getting rid of Touch ID for Face ID in 2017, that was a bit of a surprise because Touch ID was working so well. Now we'll see how this new generation, ends up working either next year or the year after. Talking a new generation and talking competition, an Android maker that maybe is integrating fingerprints into the screen is also none other than Samsung. And finally, months after originally promised, tomorrow we get the foldable phone on sale, but you've got to be in South Korea, right? Yes, and unsurprisingly, I don't have one to test this time around, but yes, Samsung is launching the new version of the Fold, the redesigned model, on the 6th tomorrow in South Korea, and we're told it'll launch around the 27th of this month in the US. And it's right on the backdrop of the iPhones launching, right? So I guess the benefit here is they're sort of hiding behind the iPhone, but if this thing really is working how it's supposed to work, they're also going to miss out on some of those marketing dollars, given all eyes will be on Apple the next few weeks. I know, I remember you bringing us that assessment of perhaps how it wasn't quite working as it should have been when you got that original demo version. But at $1,980, how big a seller is this going to be? Or is it more of a show-off flagship kind of product that actually they don't need to sell all that well? I'll tell you this, I was shocked when you said in the previous segment that Nokia candy bar phone got 10 million sales. So if they could sell 10 million units of that, and I know it's cheap, I think Samsung could sell quite a bit of those fold phones, but I still don't think the technology is ready for prime time. But we will love a bit of vintage, Mark. It's just going old school. We thank you so much. Always great to get your expertise on all the latest gadgets. Thanks. Now coming up, getting tough on big tech. From Google to Facebook and beyond, US regulators are taking aim at Silicon Valley. But are their fines more bark than bite? We'll discuss next. And later, grabbing AI. How Southeast Asia's powerhouse startup Grab is making a bid to get AI, well, everywhere. This is Bloomberg. This is Bloomberg Technology. I'm Caroline Hyde in New York. And now to a story we're continuing to follow, the regulation of big tech companies by the US government. On Tuesday, Google agreed to pay $170 million to settle claims that the company violated children's privacy laws. Now, the bulk of that is going to the US Federal Trade Commission. But that ruling has not gone over smoothly with some US lawmakers. Now, Congressman David Cicilline of Rhode Island blasted the agreement in a series of tweets, saying just a few weeks after the FTC gave Facebook a sweetheart deal, they're now giving Google the same family and friends treatment. He then added, no single executive is being held accountable, and this settlement does nothing to change the incentives that led Google to break the law in the first place. Joining us now to discuss in Washington is Maureen Olhausen, partner at Baker Botts, where she specializes in antitrust matters. Prior to that, she was herself an FTC commissioner, as well as acting chair. Great to have you with us, Maureen. What do you make of the criticism? First and foremost, that, well, the fine isn't exactly very much.
Well, the fine is only one part of the remedy in any of these cases, the Facebook case, the Google case. there are extensive provisions in the settlement orders that require Google to go above and beyond what the Children's Online Privacy Protection Act requires. So now they are having to screen content to see if it's child-directed, and to then go ahead and impose the parental notification and consent provisions on that kind of content. So I think that the fine is only one part of the equation. You really have to look at the conduct obligations that are being imposed going ahead.
And the US led the charge in this particular respect. Do you think other geographies might look into the child part of the equation, whether there are any laws being broken or being perhaps not abided by in quite the way they would like in other parts of the world?
Well, I mean, it's certainly possible, and each country might have a different approach to children's privacy. The way Congress struck the balance in the Children's Online Privacy Protection Act is to have parents make the decision whether information about their children could be collected through online sites and services. That in that way, what they're trying to balance is incentives to create child-directed content against the desire to make sure children are being protected, and that's the way we've struck the balance in the U.S. through Congress making that decision.
And clearly, some lawmakers not always thrilled with how policies enacted by the FTC, as we heard from Cicilline. He mentioned perhaps a sweetheart deal for Facebook. That sweetheart deal was a $5 billion fine coming from the FTC, so a significant chunk of change, even though it pales in comparison to Facebook's overall revenue. But what did you make of that ruling on Facebook when it comes to privacy and how it changes the modes of conduct and the way that the business practices will unfold for the business going forward?
Well, the Facebook order, the settlement there is quite extensive, and it requires Facebook to create new types of oversight and monitoring and reporting, having obligations going up to the board level. It's quite extensive. And of course, a $5 billion fine dwarfs any other privacy fine that's been imposed really anywhere. So I wouldn't call it a sweetheart deal. I think it was a rather, strong message.
Do you think tech companies are in general getting the message that they, rather than having to respond to such accusations coming from regulators such as the FTC, they can in some parts start to get ahead of the curve and ensure that they're abiding by the letter of the law and the general meaning of the law before they're hounded by you, for example?
No, I think you're right about that. I think they are, paying even more attention to some of these issues. A lot of the companies have paid close attention to these issues, but I think it's really become a board level issue in a lot of companies, because there's not just the impact, from an investigation and a fine, whatever the fine may be or what the obligations going forward are. There's also a reputational impact on these companies, and I think they care about that. But I also think it highlights the fact that the privacy laws that we have in the U.S., the Federal Trade Commission has done a good job with the law that it's been given, and Congress did pass the Children's Online Privacy Protection Act. But I think it is highlighting the desire to have maybe an additional federal privacy law that would give additional guidance to consumers and enforcers and industry itself.
Do you think that we are coming upon a time where more laws will be written? Can we get bipartisan approach to whether it be privacy, whether it be, the very sheer size of big technology, how it affects competition? We're certainly seeing more Senate hearings going on, but do you think policy will be enacted?
I think it's possible we could get a federal privacy law on a bipartisan basis. It would have to be on a bipartisan basis to get one passed, right? Because the House and Senate are, one is held by the Democrats and one by the Republicans, so it's a necessity. But I think that there is a strong interest in Congress in moving ahead on this. It's really coming from a lot of different areas of concern where I think industry wants more guidance. I think regulators want more tools. The FTC has asked for that. I think consumers are looking for better protections. And then, of course, we have the impact of a looming California law going into effect at the turn of the year, which may then effectively set a federal standard, except for the fact that other states are looking at this too. So we may be faced with a situation of, conflicting laws that will actually make it harder to determine what's the right course moving ahead.
It feels like the FTC and indeed regulators are now more willing to use their teeth. But do you think they have been behind the curve? For many, I mean, I used to report over in Europe and often about how the EU was leading the charge when it came to regulatory perspective over big tech. Has the US lacked, and has it been behind the curve and only really responding to a public outcry?
I would disagree with that. In Europe, they certainly have been put regulations in place, but the question is how much they enforce those regulations. Whereas in the U.S., we have the Federal Trade Commission Act. It's a general act, but the FTC has used it fairly effectively I was there when we brought the first online privacy case in 1999 against GeoCities, and then hundreds since. So the FTC has brought more than 250 privacy and data security cases. So it's been active on the enforcement front. So I think, the FTC is looking for additional tools now. Certainly the internet has grown. Some of these issues have grown along with it, privacy concerns along with it. So I think, not to denigrate what's been done so far, while acknowledging that maybe Congress does need to step up here, and Congress, hasn't passed a general privacy law, and consider whether they could come to an agreement and enact a bipartisan general privacy law.
And going forward, therefore, with general privacy being the one thing that's being focused on, what about more broad, have you thought of more broadly about whether we will see the competition aspect building up as well? I know that you're more about antitrust, but is there an element that you could see, particularly with a change in terms of president, whether we might see any sort of change in terms of the size of big tech, the impact on competition, and whether indeed this is something that people need to be acutely aware of?
There is activity now at the Department of Justice and at the Federal Trade Commission to specifically take a hard look at big tech. I think, the agencies have looked before. When you look back, there are many cases that have been brought. We look at the Microsoft case, you can go back to the IBM case. So it's not that antitrust has never looked at tech issues before. They certainly have. I think that the question, though, is we have our antitrust laws. They've been enforced by the courts. And we have a consumer welfare standard in the U.S. And the question is, are these companies engaging in behavior that is anti-competitive and that ultimately makes consumers worse off? Not competitors worse off, but consumers worse off. And that is the standard. And I think the courts have been pretty clear that that's the standard they're going to hold any government enforcement action to. So I think it's important to always see, can we improve our tools? Are there any competitive behaviors that we're missing? But the ultimate goal of antitrust law is to say, are consumers being well served? And I think the courts, unless Congress changes the law, are going to continue to hold to that standard.
Maureen Ohlhausen, great to get your expertise and, of course, your experience. Baker Potts, you are now former FTC Commissioner. Now, let's switch gears now to Southeast Asia, because tech startup Grab is looking to invest $150 million in AI over the next year as it seeks to expand its business beyond food delivery and ride-hailing. Grab is working with Microsoft to explore mobile facial and image recognition, as well as computer vision technologies. Now, speaking exclusively at Bloomberg's Sooner Than You Think conference in Singapore, co-founder Hui Ling Tan explained, where that money is coming from.
I think it's a two-way thing that we're thinking about. There's the concept of breadth as well as depth. Now, for us, when we're thinking about further investments in AI, we're thinking about moving from AI-powered to AI everywhere. and that's why breadth is important. AI is very, very important technology that we want not just our 2,000 technologists globally to think of and be empowered and skilled to use, but we also want all of our non-technologists, whether it's a marketing grabber, an operational grabber, a strategist, to know enough about AI so they can understand how it can be more smartly used to spot daily opportunities to solve different customer problems. That's on the breadth front. On the depth front, it's in further investing into specific AI technologies that are extremely relevant to the customer problems that we're trying to solve. For example, NLP for better translations for the many different languages and dialects that you see in Southeast Asia. Fly north, south, east, west from Singapore, and you'll hit probably 50 different languages and dialects within a 1 hour radius, right? And beyond that, as I mentioned, fraud, safety, trust, really important for us. Personalization, marketplace optimization, and also mapping and geo.
You've talked about getting inspiration from China for AI. What exactly do you mean? And what kind of inspiration have you had?
I think there are some things that we continue to get inspiration from all the global best players in the world. And what's most important for us is using technology for the sake of solving specific customer problems. And that's the same for AI. So we don't build AI for the sake of AI. And when I think about what China, US, Europe, and different companies across the world have been able to do, they've built great platforms that are very localized to the problems that they're trying to solve. So I'll give you an example. We have a partnership with Microsoft right now that's focused on AI, right? They have actually helped us a lot on two different fronts. One is facial recognition for safety, improving the verification for our drivers and passengers. Secondly, also on NLP, as I mentioned, because the localized languages in Southeast Asia are underserved by existing global translation platforms. So we're actually building localized, segmented technology that's very specific to Grab and Microsoft at this point in time.
Co-founder there, Huiling Tan, at Bloomberg's Sooner Than You Think conference in Singapore with Haslinda Amin of Bloomberg. Now coming up, Friday means Jobs Day. We'll break down what the tech sector is expecting. That's next. This is Bloomberg. Now, on Friday, we'll get yet another health check on the US economy with the latest workforce numbers. Expectations say that 160,000 new jobs will be added and the unemployment rate staying stable at 3.7% in the US. But being as this is Bloomberg Technology, we want to know, well, just what this means for those workers involved in software and beyond. To answer that, let's head to Chicago, where Becky Frankowitz, president of North American region for Manpower Group, joins us for our work shifting segment. Becky, great to have you here. So, 160,000, 3.7%, all looks pretty healthy. Dig into the technology sector for us. How much are they contributing to net gains?
Yeah, so we're seeing demand for IT jobs, tech skills continue to grow across the nation, outpacing our supply. And interestingly, traditionally we talk about the West and East Coast for tech. We're seeing that hit the middle of America in cities like Dallas, Boise, Chicago. I'm really seeing demand outpace supply across the country now for tech. So we anticipate another month of strong job gains in the technology sector.
But if demand is outstripping supply, where therefore is supply coming from? Are we seeing immigration still helping fill to a certain extent? Is that being put off by certain movements in the White House? Is it more about having to upskill within your own business?
Yeah, really the defining problem of our time in the tech space is making sure we can upskill our workers, meaning teaching them new skills for tomorrow's jobs to meet the demand. Because tech, skills are changing at the pace of tech. And so partnering with companies to make sure we're helping create the workforce that we need is critical for the tech space. At Manpower Group, our real-time view on tech is that we have a little over 500,000 open tech jobs today. 50% of those or so are software engineers, another quarter are IT project managers. And so we have jobs open, but with a 1% unemployment rate in tech, it's going to be about upskilling and bringing new workers into the space.
Interestingly, I had a conversation with someone called Andrew Challenger earlier, that he being of Challenger Grain Christmas. They'd run some really interesting data, finally showing that actually how many jobs are being lost because of trade or trade uncertainties. They say 10,000 job cuts have been made because in technology companies, largely because of trade difficulties, quote unquote. And that's 10,000 in just August alone. Is this something you're hearing? And if so, where from in terms of the tech space?
Yeah, so our real-time view on the market is not that. We are continuing to see demand come in for jobs, and we have companies that are willing to hire. So jobs for people in IT are still abundant. And again, there's a 1% unemployment. So we have a lot of room in the economy to bring people into the space. So we're not seeing the impact from trade. I will tell you, back in March, April, we saw a little pause. I would call it, observation. We saw that pick up about 6 weeks later, and it has not slowed down since.
How long do you think this can be sustained? Are there any brewings of uncertainty, of slowdown, or you really think that this unemployment level in the technology space will remain at about 1%?
Yes, well, we know, recession will come. The question is when. So we are not seeing a slowdown today. If anything, we're seeing really employers start to move from talk to action around this concept of upskilling that we talked about. We at Manpower Group are partnering with Microsoft around gaming software jobs, helping upskill people to actually be software testers, identifying adjacent skills for people to come into the space and really contribute when they didn't have the skill to begin with.
Interesting. Great to get your expertise. We look forward to the numbers tomorrow, as I'm sure you do.
Yes.
Becky Frankowitz
Absolutely.
of Manpower Group, thank you for joining us. Still ahead, more than just friends. Facebook is bringing its dating service to the US. But will the new feature catch on with players like Match already on the scene? We'll discuss next. This is Bloomberg. So Facebook is getting into the dating game. The social giant officially launched its matchmaking service, Facebook Dating, in the US on Thursday, over a year after it was first announced. Now, the feature has been tested in 19 countries so far and allows users to combine elements of their Facebook and Instagram accounts in a separate dating profile. Now, the product also offers a, quote, secret crush feature. They can match Facebook daters with their friends and Instagram followers. Match shares fell sharply on the announcement amid concerns over competition of its popular Tinder dating app. Joining us from San Francisco to discuss is Bloomberg's Kurt Wagner. So, does Tinder have much to fear?
I think so, if only because of the fact that Facebook has, more than 2 billion users around the world, right? So anytime Facebook gets into a new industry, I think those who are already there have to at least pay attention. The one thing that Facebook has that most of these others don't is the built-in network, right? So the company isn't going to necessarily match people with their friends, because that's a little weird on the dating front, but they know who their friends of friends are, and they know who's in the area. And I think those are valuable connections for the company to know when you're dealing with a romantic dating app.
Yeah, talk to me how this exactly works, because my parents aren't exactly on Instagram, but I know some people's family are, for example, on Facebook. And the weirdness factor of kind of how separate is the dating profile from the rest of what you're up to?
So the dating profile is supposed to be completely separate. It exists within Facebook's app, but the profile itself, including the photos and the descriptions and all that, is different than what you would have for your normal Facebook profile. And the idea is that you can kind of carve out this little world that's dating specific, that doesn't touch on the rest of your Facebook experience. And so what's interesting, though, is that profile, and what I was writing about today, can pull elements of your Instagram profile as well. So you could have pictures from Instagram. Eventually, you'll be able to have your Instagram story on there as well. So it's kind of a blending of your Facebook life and your Instagram life in this new separate dating profile, and that's what they're trying to create.
Interesting. Why has it taken so long to come to the US when they've been playing at it in 19 countries already?
Well, I imagine that the U.S. is probably the most critical market for them from a PR and business standpoint, right? Not only is it the market where most of the journalists who are writing critically about Facebook operate, so suddenly, you're going to have those first-person stories about, hey, I tried Facebook dating and XYZ happened. So you got that element of it, but also there's an element of business here, right? If Facebook is to turn this into a money-making endeavor, the United States has been their biggest market for advertising. horizon, and I assume that is how they will ultimately try to make money from this sometime down the road. And so I think they wanted to have some kind of proof of concept here that it works in other markets before they brought it to what I would consider their most important one.
Uh-oh, so every single Facebook reporter is currently rolling their eyes as their editor asks them to go and test it all out. I'm interested in how much you think the whole privacy, reputational elements of the last year or 2 years for Facebook will impact the dating side of the equation, or will it be very limited, do you think?
Well, I think this is going to be limited from a use case regardless of the privacy element. But when you look at the kind of stuff that Facebook has done over the last year, you know, with Portal, their home chat device, the video chat device, they're rolling out dating. It doesn't seem like they're certainly slowing down when it comes to privacy related things, right? I mean, they're pushing into areas that are very intimate, being relationships or in the home. I do think that, you know, the U.S. Consumers in the U.S. care more about the privacy and think of Facebook differently on privacy than maybe other parts of the world. So I think it'll be a part of the PR and the conversation around this dating thing. But clearly, Facebook doesn't seem so concerned that they're willing to, pull back on launching new stuff altogether that might be considered fringe.
Kurt Wagner, eloquently put across the board when it comes to the position of love. We thank you. And finally, this hour, well, you could call it a match made in heaven. We are so pleased to announce that Bloomberg technology anchor Emily Chang has a new addition to her family. It's a baby girl, Madeline. She was born Wednesday night. Both mum and baby are doing really well, and the entire Bloomberg technology team send so much love and support to Emily and her family as they begin this new chapter. And as for the show, well, Bloomberg's Taylor Riggs will be hosting it from San Francisco starting next week. And it will be a busy week at that, as the team will be covering Apple's big iPhone event on Tuesday. And throughout the week, we'll be bringing you our medical technology series called Wired for Health. And that does it from this edition of Bloomberg Technology. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology. Be sure to follow our global breaking news network at TikTok on Twitter. From New York, from San Francisco, this is Bloomberg.